Doing great.
Yes, sir.
Good
Yeah,
deal.
I had a fantastic day. I got an awesome phone call yesterday from something that I put my name in for a drawing. It's a store in Madison, all men's stuff. It's a pretty neat store. Anyway, I had completely forgot because it was 2 months ago, and he called me last night. Said, "Hey, man, you won." I said, "What? What did I win?" And he goes on to tell me I won over $700 worth of stuff.
Nice. Is it like
The
mainly
new-
a clothing?
A new Turtle Box speaker. You ever seen those?
Oh, cool.
The
Yeah.
things are like $400, $150 to Half Shell, $100 gift card, Visa gift card, T-shirts, and a $200 massage.
Oh, that's cool.
Isn't that crazy?
So, do you? Was it you that was telling me something the other day about somebody called you for something and you weren't there? Yeah, that was.
Yeah, that was Miss Kelly's, bro. That was the big deal.
Yeah, that was the furniture.
$8,000, man. Yeah,
$8,000. Oof.
yeah. Had to be there to get it. But
Well,
this one you didn't have to be. So,
At least you got something with this one.
yep. Winner, chicken dinner.
Yeah. What'd you say this place was called again?
I didn't actually tell you what it was,
Oh,
but it's Raggio and
Raggio.
Mercantosh or whatever. Mercantosh. I don't know how you say it, but it's like
an
an all men's store. Leather bags, leather belts, nice pants. I mean, it's a nice upscale kind of store,
Oh, okay.
but highly recommend it. Bought me a new pair of glasses there today with the $100 Visa gift card. So
cool. Nice.
Friars. You ever heard of the Friars sunglasses?
I don't know if I know that brand, but I mean, I don't
Yeah, they're sharp.
know a
man.
ton of sunglasses brand. They're sharp. Cool.
Yes, very sharp.
Friars made by priests at a monastery.
Sharp glasses, sunglasses.
Well, cool deal.
I'll explain that to y'all. It'll be funny.
Did you say made by a priest? Is that what you said?
Yeah, made by priests at a monastery. Friars, get it? Friars.
Oh yeah.
Okay.
It took me a minute. Went over my head there for a minute. Had to bring myself back in. Well,
Kevin, just some news that we were talking about before we actually.
what in the world? Too much ADD.
You don't know that's the new background, man.
Okay. Just some news we were talking about before we actually begin recording. As of a May 3rd announcement of this year, Warren Buffett announced he was stepping down as the CEO of Berkshire Hathaway. That will be at the end of the year 2025. During the company's annual shareholder meeting in Omaha, Nebraska, he will hand the reins over to Vice Chairman Greg Abel, who has been in that position since 2018.
Yeah, that must be the guy I was thinking it was. I remember hearing. Oh, and Ryan, real quick, just are we recording already?
We are, yeah. We're
I
live.
figured we probably were.
Yeah.
Okay. Yeah, I had heard years back that Buffett had selected somebody to screen new investments, and I believe that is that guy. My understanding, but I'll have to verify that later. But I'm pretty sure that's who that is. Hey, and tell them what you told us a minute ago about the 1% thing. You know what I'm talking about?
Yes. Greg Abel, who will be taking over, has a net worth. Well, it's not actually specifically stated, but he sold a 1% stake at Berkshire Hathaway Energy. And this is at Berkshire Hathaway Energy. He sold a 1% stake for $870 million in June of 2022. In October of 2022, he purchased 168 shares of Berkshire Class A shares worth approximately $68 million.
Jeez.
Nice.
Selling 1% and that almost being $1 billion is pretty crazy.
Yeah, 1% stake just in their energy company.
Yeah, which is just a subsidiary, basically.
I guess that saying's true. You got to have money to make money.
The more you put in, it's easier to multiply.
Yeah. No, it's definitely true. To some extent, anyway. People, especially billionaires and millionaires, try to convince you that it doesn't take money to make money, but
You ever seen
it
that show?
definitely
I think it
does
was on
to an extent.
Netflix. A guy started with $100 And he was trying to raise a business within, I think, 90 days, up to $1 million.
Was it Grant Cardone or?
I don't think so. No, that doesn't
Okay.
sound right. You know what I'm talking about, Chris? I think you and I talked about it one time, or you watched it or something like that.
Yeah, the one that I saw was not specifically that manner, but the one that I saw, a guy was going to try to either, I guess it was trade until he got a house.
Yeah, I've watched that guy. I think he's still doing it, right? Or is it already done?
Oh, I mean, he already got a house. It actually took him a lot shorter time than he thought it was going to.
I got you.
But and I really think it was kind of, some people were trying to help him out too, so they would trade him with things that were really kind of worth more than he was given.
Yeah, I know. I saw that. Yeah.
But to have a house free and clear just after several trades is pretty nice.
Yeah, it is. What did he trade to get the house?
Honestly, I can't even remember. It's been a while. I'll see if I can.
That would be interesting to know that.
That's right.
Yeah, I'm sure there's more than one of those shows, but I'm pretty sure. Yeah, Grant was another one. But even if they do start off, it can be done. You can start making some money without money, but you're not going to make big money without having money at your disposal. That's for sure. But everybody's got to start somewhere.
Takes big money to make big money.
Yeah, that's definitely true for sure. And of course, the more you accumulate and the bigger you get, the more you can do what a lot of big corporations that are doing, which is mergers and acquisitions, buying other companies and that sort of thing. And unfortunately, once they get too large, that starts causing some issues. Yeah.
And I think a lot of people also have the misconception that the bigger you get, the more money you get, the more powerful you get, that there's not work involved in that. And I think the people that, if you were to talk to them, would tell you just the opposite.
Yeah. I mean, it's, different kind of work, but yeah, there's, most people that head really large companies, people are like, oh, they don't work. Well, they don't do the same kind of work as other people do. But if you were to look at the hours that they spend managing the business or whatever, it comes out to a lot.
I mean, look at Trump. Doesn't he sleep like only 4 hours a day?
Something like that, yeah. 4
and
or
he's
5.
80 years old.
That's right.
Yeah.
And the dude's a workaholic.
Mm-hmm.
That's right.
Yeah, I don't know if I could ever, sacrifice as much sleep as he and some others do, but I mean, it's obviously it's served some of them really well. So I mean, it's hard to argue with results. But yeah, I prefer to. I don't know. You hear different opinions too when people talk about things like work-life balance. Most workaholics and really wealthy people hate that term, but most people that aren't wealthy, love it. And I mean, I definitely think that, if we're going to be followers of Christ, we can spend a lot of time working, but we can't spend all of our time or self-serving.
Mm-hmm.
We gotta make sure some of that time is spent serving others besides ourselves, I guess is my point there. But
or you can do both simultaneously.
Yeah, no, I mean, you can definitely do both. Well, you just, like we've talked about before, you have to try not to get caught up in letting money rule you.
Mm-hmm.
But anyway, with that being said, what I wanted to spend some time doing today is actually trying to educate folks on how to analyze stocks themselves. I know a lot of people, everybody's looking for somebody or some company to manage everything for them, but part of the reason I started this podcast is I want to try to educate people on how to how they can do some of these things themselves. So that's kind of what we're talking about today. And actually, Ryan, if you're cool with it, I guess.
Do I have to leave my DJ spot?
Yeah. Well, I mean, it's you don't have to, but I mean, it would be. This is stuff that would be handy for us to all be able to look at.
All right.
Let's hopefully that other mic's working. It should be. Guess we're fixing to find out.
By the way, just to finish up on that story that we had just a second ago, a guy's name was Kyle McDonald. He was a Canadian blogger. He started out with a single red paperclip, and 14 trades later had a house.
A single red paperclip, is that what you
That's what he started trading with, a single red paperclip.
I'll have to look into that. That's interesting.
What is amazing now, I mean, anybody will trade for anything, but to do it in 14 trades,
That's pretty
that's
legit.
stunning. But he
Yeah.
did it over a year, 14 trades in a year, and he had a house.
Wow. That's incredible.
Yeah, that's.
I don't like this mic.
That's ridiculous. You don't like that mic?
No, man, you know I got OCD. I got to fix things. Gosh.
Well, fix it then, man.
I can't mute myself. All I hear is myself messing with the mic.
It's all right.
Yeah, all right.
Man.
Uncut, unedited.
All right, what are we looking at?
All right, so we are on, and I've got to remember that we've got listeners and not viewers right now. So we are on a website called Simply Wall Street, and this is a stock screener. And now you can do or look up a few investments on here for free, but full disclaimer, this thing is paid. So, and it's not, I wouldn't say it's super expensive, but it's not cheap either. But this is the reason I got it, and I've gotten it before, is just because it's a really good tool. And I'm gonna show you or tell you why. So to get started, does anybody have any companies that they're curious about? Public companies? We could do Tesla. We could do Microsoft. Any of those guys?
Tesla would be cool.
You want to look at Tesla?
Yeah, because I want one.
They do have some cool vehicles, even though I know they're getting a lot of hate here lately. But
Only from Democrats.
yeah, well, yeah, I don't know. He's ever since Doge, that Doge has been causing him some problems for sure. But I mean, we need accountability.
That's right. People that are getting ahead because of fraud, they don't like you to stop them.
Yeah, that's definitely true. Anyway, so for those of you listening, we're looking at Tesla right now. And this stock screener up at the top shows you some stuff, like it says earnings are forecast to grow 27.61% a year. And this screener should let us click on that and kind of show us why. It gives you some future criteria that you can look at. And it typically gives you a couple of warning signs too. Like it says Tesla's revenue of 15.9% per year is forecast to grow slower than 20% per year. So it's like, basically that's just telling you that their revenue's slowing down a little bit, which can be a troubling sign, but I mean, growth is still growth. So
He's fine.
Well,
yeah,
part of that,
he's
part of
doing
that
all right.
slowing is what's going on politically right now.
Yeah, I would imagine that's
Is all that
true.
still
for
going
sure.
on?
Do what now?
Is it all still going on, like that political stuff?
Mm-hmm.
Yeah.
And it will be until he steps down.
Yeah. Yeah, it's gonna be interesting to see how it all plays.
Now, this is not a permanent position. He only agreed to come on for a certain amount of time until he could on paper save the United States $1 trillion. And he does that by saving the United States $4 billion a day, either in fraud or waste. and currently he's on track and ahead of schedule.
Wow.
Yeah, well, the big thing that we have to remember is that we just have to start getting in the direction of not continually year after year piling on trillions and trillions more in debt. So
Right. It doesn't mean anything. He could do a great, and I think he is doing a great job. But if we turn right around and elect another administration that puts the money right back, we've done nothing.
yeah, yep, it can easily be wiped out. So I hope people remember that and have that mentality of, you can't just do it for 1 or 2 terms and expect things to get better. It's got to be a continual thing. But yeah, so looking at Tesla, there's this panel over on the left that I thought I was going to be able to expand. I think there's more stuff, but anyway, the way that this screener works is there's the main metrics is it has dividend, value, future, past, and health. So value sort of tells you how good of a deal it is as far as like the price per share. Future, it's telling you what the future growth potential is, usually revenue and earnings. Past, it tells you how it's done historically. Health, usually debt to equity information there. And then dividend, it tells you if it pays some of the cash flows in the form of a dividend. And I don't think Tesla has a dividend, but let's take a look at health. Or well, let's look at value first. Value right now is not a strong point for Tesla, and this is one of those points that I've been trying to make to people about really large companies, and people never listen. And as a matter of fact, the market itself doesn't listen because people keep buying these things and pushing prices higher when they're, paying for something that's already overpriced. But what is the fair price of Tesla? So this screener claims that Tesla right now is 127.8% overvalued. Now, just because at the same time, even after saying that, just because something is overvalued doesn't mean that it can't stay overvalued for a while. But this screener is telling us that fair value would be $139.79 a share. And this can be confusing. You might say, I thought Tesla was over $1,000 a share. At one point it was, but sometimes these companies have things called forward splits and reverse splits. And I want to say Tesla has had several forward splits. I don't know how many exactly, but their shares have definitely split, and so that's why they appear lower today than they used to. The company itself hasn't lost that value. It's just the reason companies sometimes decide to split their shares is to enable newer investors to have more affordable prices to get into the company or to invest into the company. I think on another episode we looked at Berkshire, Warren Buffett's company, and the Class A shares were, I don't know, like over 700,000.
Right.
Because I don't think they ever split their stock. So that just goes to show you, if you never have any splits and the company's really successful, the share price can get, most people can't buy one share for $750,000 or whatever. But
as of today, it's $767,000
$767
for one. Yes.
I wasn't too far off. Yeah, so even higher than I thought.
That's the share that the new, soon to be new chairman bought 168 shares of.
Oh wow. Okay. There's part of what we're looking at too on this valuation metric on the screener. There's a couple of sections where it tells you if something fair value or significantly below fair value. And it tells us that Tesla's failing those metrics right now. But what is this right here? Price to sales ratio versus peers. And it's higher. So the really big mega cap companies, since they receive so much attention, and I think I just saw something about, it's got 42 analysts. Typically, the more analysts that these companies have watching their stock, information is going to spread more about the company. More people are going to invest, and when more people buy in, it's sort of like the same thing as supply and demand in the broader economy. It's the more that people buy into something, the more the price is going to go up, and the more people that are selling, the more it's going to go down. So Tesla is very popular, and I mean, it has performed well, but I say all this to say that you should still be careful. If you want to invest some, then fine, but now is not historically a great time.
And these things are all about personal sacrifice too. When you talk about, especially, when you talk about stocks that are overvalued, I'm just going to be straightforward with you. Earlier today, I bought a small package of Cheetos Puffs that were way overvalued at a curb store. However, I did enjoy them. But if you take that money just like that, it's all about sacrifice. If you sacrifice the desire to do that, you save up some money and you're able to invest it for long term. That goes a long way.
Yeah.
And just some people aren't willing to do that.
Yeah. Let's see. So I'm not gonna. Another cool thing about the screener that I like, and I'm not gonna call anybody's names out or whatever, but it'll actually show you. I thought it would just show you when a company buys a bunch of shares, but I think if I'm not mistaken, quarterly people have to report when they buy a lot of shares in something. And I forget what the percentage is that has to be made public. I want to say,
interesting,
if you own 10% or more of a big public company, it has to be reported to the SEC. But anyway, again, I'm not going to call out the name, but we can see where in April somebody bought 4,000 shares, and in February somebody else bought 75,000 shares. Let's see,
with an interesting last name.
Yeah. Yeah. And it looks like these were members of the board of directors. So sometimes that can be a good sign. I mean, sometimes it might be that they received equity from the company and it's showing as a purchase, or they may have actually invested that money themselves. I'm not entirely sure, but there's also there's another metric called insider trading volume, and it shows that in the last 3 months, 4,000 shares have been purchased by one person, and in the last 3 to 6 months, somebody sold 75,000 shares. So, sometimes that can indicate that something good or bad is happening, but there are also times where insiders, whether they be the board of directors or executives, sometimes they're just simply selling shares to take a slight profit.
Or somebody may have decided that they were done and they're going home.
Yeah. Sometimes people leave the company, so that's
because walking away with that amount of money that we just saw there would be a nice retirement fund.
Yeah, it would be. But while we are on the topic of Tesla, let's see what past performance tells us, because we know that their past performance was really good. Yeah, here's something pretty telling. Look back in 2014, Tesla's revenue was $2.857 billion a year, and then fast forward to, it looks like the peak was somewhere around December of 2024, and revenues all the way up to 97, almost 98 billion a year in revenue, and then earnings are 7 billion a year. But that revenue number that's wild. 97 billion.
And Kevin, that's something that that I think can't be overstated either, is that when you're invested in something like this, especially when you're talking about investing for the long term, you also have to consider whether or not these items that he's selling are going to be the kind of items that people want to buy. And these things, unless there's significant innovation that keeps happening, they have a shelf life, and people will decide one day. Saturn was a car company too that went out of business because people weren't buying them.
Mm-hmm.
And one day that could happen. I'd hope it doesn't, but one day it could.
Yeah, that's the scary thing about all businesses is if you are not constantly on top of things and innovating and finding new and good people, plenty of businesses have gone out of business. And another one that I think a lot of people my age think about is Blockbuster. And then not too long ago, we had the thing with GameStop. I say not too long ago. I'm sure it's been years now, but sometimes you see businesses like when I was young, had somebody told me that Blockbuster Video was going to go out of business, I'd have laughed at them.
That's right.
But here we are today with Netflix and Hulu and all these other streamers.
That's right.
So
well, one thing about it is unless Elon Musk just goes off the deep end, I wouldn't bet against him. He may have to change and put his money in a different company sometime. However, he's a smart man. Everything that he's done has made money.
Yeah, no, traditionally speaking, betting against Elon Musk is not a good idea.
That's right.
I imagine. I know that there were some people that shorted him while he was building the company up, and I have a feeling that most of those people lost a lot of money.
That's right.
So yeah, somebody that's highly motivated and I think,
just out of curiosity, I know we may have hit on that before, and I know we're kind of getting off subject. I apologize for that.
No, it's all right.
But what are your personal feelings about shorts of any kind? Would you ever do it?
Have I ever done it? Is sort of like I haven't directly shorted one company, but I have. And I think I stated this on one of the other episodes, but I have bought into something called a bear market ETF or a triple leveraged reverse ETF. So I wasn't directly shorting anything, but the broader market through that ETF, I was sort of saying that I'm expecting it to go down. But yeah, individual companies, I would say. And I mean, I'm sure plenty of people would disagree with me on this, but I would say I don't like how common shorting is. And I mean, you'll have a lot of people that will tell you that, well, you want to be able to make money when the market's going up and when it's going down. And I get that stance, but I don't think it's ever a great idea to be betting, hoping businesses will fail. I think there's a bit of a moral issue there.
Sure.
So I would say, unfortunately money can be made that way, but do I think it's a good way to make money? No.
Got you.
Money can also be made at a strip club or, doing other immoral things, but
sure.
I find it to be a pretty immoral, and maybe that's a little bit hypocritical considering that I have done a little bit of it, but going forward, I don't have any plans to participate in anything like that, and I would suggest others not as well. But that being said, everybody has free will. I can't make anybody do anything, but I would suggest, not doing that just because I feel like people tend to dehumanize things, and an important thing to remember is these are real companies with real employees, and it's not, people losing their jobs and that sort of thing is not good
Sure.
for society. So, even though if artificial intelligence gets going like everybody wants it to, there's no telling what kind of unemployment problems we'll be having then. But I guess we'll cross that bridge when we get to it.
That's right.
That's how it's looking anyway. Trying to think if there's anything on this one we haven't looked at. Okay, so as far as like their financial health, things are definitely looking pretty good right now. Their debt it shows you assets and liabilities, and their liabilities are lower than their assets, so that's always a good thing. So part of the reason I'm assuming that this, on top of, like I said, more people are buying than selling the stock, but typically if they have a really price to earnings ratio or a really high price to sales ratio, it's for a good reason. And you can tell that Tesla is definitely in a good financial position. It says their long-term assets are $65 billion and liabilities are 19. So it means that they have a lot more assets than they do liabilities. So that's a good thing. And then you have another section that shows you debt to equity, and it says that as of March 30th, 2025, they had about $7 billion in debt and about $75 billion in equity. So that's good.
It's a good ratio.
Yeah, yeah. It means financially they are healthy.
I'll tell you this as well, and this is one of the things that I used to judge car companies by, is that I feel like one of the safe things is that until you start seeing Teslas on used car lots, that you can pretty much tell that they're doing good.
Yeah. Yeah, no, I think the only one that I can think of that may not be doing so hot is the old Cybertruck, but I don't hate the Cybertruck. It definitely looks different, but and a lot of people hate it, but I mean, I don't hate it.
It's futuristic, man. I love it.
Yeah, I wouldn't mind driving one. I don't know if I'd buy one, but I mean, I'd definitely drive
I'll say
one.
this, the price is still up there. Until it starts dropping, they're doing pretty good.
Yeah.
They're over 100 right now, aren't they?
They're close to, yeah.
I went in the parking lot and looked at them.
Not only that,
$100,000 is that what you're saying?
not only that, there's a waiting list. I mean, if you wanted to buy one right now, they won't even start building it, I think, for like 3 months.
Well, okay. Well, I think the parking lot here's full.
Is it?
Yeah, it's full of Cybertrucks.
You're talking about here in Brandon?
Yeah, I went and looked at it the other day. They're full of them.
Yeah, here in Brandon, Mississippi, the town that we're in, we have that thing's relatively new, right? The Tesla dealership.
Year
think it's
old,
relatively
2
new.
years maybe.
Yeah.
I don't even think it's that old.
So we have a fairly new Tesla dealership here, and it seems like there's always Cybertrucks out there. So maybe some folks around here are buying some. I don't know. I know
There's a few of them running around.
Yeah, I know people are for sure buying, the Model S and the Model whatever. And I'm sure over time we'll see more charging stations.
One of my father-in-law's neighbors, he just bought a Tesla car, and I don't remember which one. It's like one of the higher models, and he said, they went cheap. So in my mind, I was like, I'm gonna go check this out. And I went back and said, bro, they ain't cheap.
Yeah,
They ain't went down at all.
some people have a different idea of cheap, I guess.
Yes, yeah. I don't like the way this mic sounds.
The one in here?
Yes.
Is
can't
it?
stand
Well, what's wrong with it? Is it
I
too
don't know.
loud?
It seemed like higher pitch.
It's
I've
just how
got
you
mine in there
sound. No,
dialed in, bro.
I got you. I mean, you can move back. If you
No,
want
it's
to.
fine.
All right, I got you. Yeah,
And for everybody's information, Brandon Tesla shop opened in 2022.
3 years. Wow.
3 years.
Oh, okay, the one in Brandon.
That's right.
Cool. Yeah, so fairly recent for sure. And I want to say prior to that, some other local dealerships would occasionally get some of their vehicles. So I guess
I've seen a few Teslas in other dealerships.
yeah, I guess over the past few years, Tesla decided, hey, there's a market here and we better move in. So I'm sure that's
I'll tell you this: as a whole, I love Tesla. I love the cars. I'm not a fan of the Cybertruck like some people are, but I personally view an all electric car like a third car. It may be nice to run around town with, but if you go on vacation, you're not going to use that. You're just not.
Yeah.
Yeah, and I know too, from what I've heard from other people, it's not great to have one if you get caught in a snowstorm. I shouldn't even lie. I want to say somebody's died in a blizzard or snowstorm from being in one, but
Goodness.
so I don't know if it's the lithium ion battery or what, but some component of the vehicle apparently has a lot of trouble in cold
Well, I do
weather.
know this about batteries in general. The colder it is, the harder it is to charge a battery. And that may be one of the things. For instance, there are some towns way up north near the Arctic Circle and over in Siberia that have access to cell phones. They just cannot use them because they won't live long enough to use. So they can't, just because of the temperature.
Wow.
So that may have something to do with it.
Oh, okay. Yeah, it's definitely not my area of expertise, but
Yeah, the batteries have to be a certain temperature to be able to operate.
yeah, it makes sense, I guess. But I don't know, hopefully over time that's an obstacle that they can overcome, because there's a whole big chunk of the country that's in cold weather territory. So
That's right.
I know if it was me, I'd be working to solve that problem, because that's a big
Well, just
problem.
look at it this way. Tesla has one of the longest lasting batteries of any electric car company, and it's 400 miles to empty. You understand that, for going 400 miles, especially if you're going on vacation, is pretty good. But how long does it take to charge an electric vehicle? It's not like stopping at a gas station where you can fill up
Yeah.
and get something to eat in 5 minutes and be back on the road. You can't do that with a battery.
Yeah.
Yeah. Yeah, I don't know how long exactly it takes to charge them now, but I know it's not like a gas station where you just stand there for a few minutes. It's
I think they're
Honest-
getting better, and then they have bigger batteries too, where they
Right.
can go further.
Well,
or a double battery or something.
Yeah.
there's also, and we've talked about this before as well, there's also a point at which the battery stops working. And at that point, replacing the battery costs more than the car does. So you're it's
Yeah,
basically a
forget it.
paperweight after that.
I'll forget it.
Wait, you'll forget what now?
I ain't buying no truck.
Yeah.
Like I could anyway.
Yeah. Yeah,
That's stupid.
I think I still need, and like I've said, I'm not against the vehicles and I like them, but I think it would, if I were to ever buy one, it would still be, I'd still have to see some more improvements. But obviously, plenty of people think that they're good enough, because I mean they sell a lot of vehicles for sure. But I don't know. Yeah, time will tell if I ever get an electric vehicle or not. I don't know.
Is there have they proven how long it'll last, Chris?
They're hit and miss. Sometimes it's luck of the draw. I've seen some people get some that happen to have just not a very good battery. And here's the thing. Your battery goes bad in an electric vehicle. It's not like you can just take it back to the dealership and sell it to them. They won't take it. They don't want it. Nobody else wants it. You're basically stuck with a vehicle that you can no longer use and nobody else wants. So, along those lines too, depending on what vehicle you get, depending on, if you get a good one or not, it's not a very good return when you can't get any money for it.
Yeah. Yeah, that's a problem for sure. And I don't know what they cost right this minute, but I know at one time if you did have to get a new battery for an electric vehicle, it was outrageously priced. So,
Well, Chris said it was a whole new car.
yeah,
Yeah,
the price of a
yeah.
whole new car. Jeez. Yeah, that's to me that's unsustainable. That's gonna have to get better. Maybe they need to look at trying to, and I mean, I'm sure this is much easier said than done, but maybe they ought to start trying to look for something besides lithium to, I guess we just need more innovation in battery technology again, but definitely beyond my wheelhouse and skill. I can't tell them how to improve
What about
that.
solar power?
Yeah. I mean, I've heard talks of people trying to use solar for vehicles.
Why not?
Yeah.
You can power a whole house.
Yeah, I mean, I think it's powerful, but maybe not quite powerful enough yet. But I don't see why they couldn't use that in combination with other things until it does become powerful enough.
That would be legit.
Yeah, I mean, why not use? If we can use the sun's power, that seems like a good idea for sure. But anyway, I guess let's jump to something else. Anybody got anything that they want to look at? There's Netflix, you got Alphabet, or we could do some smaller company that not a lot of people necessarily know about. How about I guess we can look at Netflix, since I feel like most people know what Netflix is. And I spoke about Blockbuster, so figure we can see how Netflix is doing.
I apologize. I was a little bit wrong about replacing that battery. I'll tell you this though. A 2025 Tesla Model 3 starts at $42,000. To replace the battery costs between $10,000 and $20,000.
Still,
To replace.
Still too much. In
That's
my
right.
opinion.
That's right.
Yeah, that's especially. I mean, even 10,000 is expensive, but 20,000. Like, come on, who besides like super wealthy can? And even if you are really wealthy, I don't see the value there, because I mean,
and you're talking about, let's say you had to replace one. Itself, it is still going to die one day too, and you're going to have to replace it.
Yeah.
Mm-hmm.
Yeah. So even if the rest of the vehicle lasts for a long time, best case scenario, you're gonna spend 10 to 20 grand every however.
Yeah,
often.
however long it lasts, you're going to be spending between $10,000 and $20,000 to replace it.
Mm-hmm.
You know that from the day you buy it.
Yeah.
Now let's be honest. If you went out and bought a gas vehicle and you knew that there was a part on it you were going to have to replace, let's say in 10 years, that was going to cost you, let's be conservative, $15,000, would you buy that vehicle?
Yeah, nah.
I just don't think that I would.
Yeah.
Yeah, hopefully they can continue to innovate and make things more and more affordable, especially when it comes to the batteries. So I guess we'll see how that plays out over the years. So for those of you listening, I've got Netflix pulled up on the stock screener now, and it looks like maybe as of close today, it's worth $472.4 billion. And it looks like over the past year, it has increased in value roughly 86%. So
Is per share $1,000? $1,100? Is that per share?
I don't. Hang on. I can just.
Seems like a lot.
I don't think it's that much per share. Well, yeah, it is.
Wow.
Yeah, and actually, this, I don't know how many times I talked about splits a minute ago. I don't know how many times the stock has split, but yeah, as of right now, it's 1,138 a share, which is crazy.
Yeah.
But not as crazy as it would be if they never split.
Are you guys old enough to know how Netflix started out?
What, mailing DVDs? Is that what you?
Right.
Yeah. Oh yeah.
Right.
I used to
mailing DVDs.
Oh yeah, that was how you rented.
I used to get some DVDs
Like
in the mail.
Redbox.
Yeah.
But you did it online.
You never did it at all?
No, bro.
Oh man.
It'd be in your mailbox.
That's cool.
A lot of people complain about that not being a thing anymore. Still to
Bro,
this day.
I was still on VHS when I moved down here.
Well, you're even older school then. Is that a word? Older.
But I said that to say, think about this.
even more.
You know,
old school.
just like we talked about before about getting in early on something. How would it have been to be able to get into Netflix when it was originally offered?
Yeah.
To this day, I mean, it would have been, you know, depending on what you invested, it could have been incredible.
Yeah, it would have definitely would have been nice to get in early, and it's real easy to. That's what everybody always talks about is, oh man, if I could have just gotten into Microsoft, Apple, whatever. Yeah, it's always, I don't know. It's
See,
always
Netflix IPO in 2002 was $15 a share.
wait, that what year was that you said?
2002.
Wow.
23 years ago, it was $15 a share, and today it is what, just over 1,300?
Yeah.
Or I'm sorry, just over 1,100.
Yeah, and that one thing that takes a little while for new investors to learn, and something that took me a little while to understand, is that really doesn't even show you the full scope either, because like I said, these things split. And speaking of splits, let me see if I can see how many times has Netflix split. Let's see if it tells us. Only twice? I would have thought more than that. Google AI is telling us that Netflix stock has split twice. A 2-for-1 split in 2004. But then listen to this, a 7-for-1 split in 2015. So what that share price is, multiply that by 7 real quick. And let's see what we got.
30. You said times 7?
Yeah. Just 1138 times 7, I guess.
Yeah, 7,968.
So if it hadn't split recently 7 times, it would be over $7,000 a share. And then that also doesn't include that additional 2-for-1 split. So probably be something like $14,000 a share.
Wow.
Actually more.
Wow.
Yeah. So, sometimes, you know, I think most companies like that, excuse me. Most companies try not to split too much, but like I said, when things get so expensive that most investors feel like they can't afford to buy a share, that's typically when these companies will split.
And you look at things like, just like Netflix and Apple. You're talking about companies who originally started out just doing a niche market. Just, you know, Apple started out with the computer things. Netflix really started out kind of as an online blockbuster, right?
Mm-hmm.
So, but today they've advanced so much that they're actually making their own movies. They're paying actors. They're making their own movies. I mean, who would have thought that? And this has just been in 20 years that this happened. And, you know, again, if you could have gotten in originally on this, you'd be sitting fairly pretty right now with your investment.
Oh yeah. Yeah. It's what another, you know, from more perspective, what's really crazy to me about stuff like Netflix is I'm going to look up one of the largest railroads in the country, which 100 years ago, you probably would have thought that the railroad would be like, oh, that's got to be like an unlimited investment. That's because, I mean, railroads used to transport pretty much all goods across the United States. So let's take a look at Union Pacific. And the reason I'm bringing up railroads all of a sudden is, as valuable as an investor like me would expect the railroad to be, even after all these years, as of close of today, Union Pacific Railroad is worth roughly $136 billion. And Netflix, like Chris was saying, it was what, like $15 a share in 2004 or something like that.
2002.
2002. Netflix even though it hasn't been around nearly as long as the railroad, already closing in on 500 billion in market cap, which
It's
is
amazing.
yeah, it's. I guess it goes to show you how much we like entertainment.
That's right.
People like to be entertained, so and I don't get me wrong, I like that things like Netflix are around, but everything's always a double-edged sword. I guess the downside of it is sometimes, it feels like the frequency of high quality movies may have fallen a little bit, but I mean, it's it's nice to have access on a streaming platform at the same time. So you win some and you lose some. I guess we're better off now for having streaming platforms, but I know that people in the movie industry, and especially those that invested in movie theaters, I know they've probably been hurting for years now. So just goes to show you that there's always a bit of luck involved, because somebody in 2002 might have bought thousands of Netflix shares, or if somebody in that time decided to invest in movie theaters, I mean, they could potentially be bankrupt now. So.
Well, I'll be honest with you. When I originally saw what they were doing, I was like, "Oh no, this will never work." And but they've proven everybody wrong.
Yeah, it was one of those new things that nobody was fully convinced was gonna pan out, and it did more than pan out for sure.
Just for curiosity's sake, I looked up Apple. They've split 5 times since 1980. The IPO was in 1980. In 1987, there was a 2-for-1 split. In the year 2000, there was a 2-for-1 split. In 2005, there was a 2-for-1. In 2014, there was a 7-for-1. And in 2020, there was a 4-for-1.
Golly, that's a lot. Yeah, I just pulled up Apple on the screener, and that one, as of close of today, $3.1 trillion. Which is crazy. And somebody like me that has been looking at this stuff for a long time, it still blows my mind that you start when something gets that big, you start thinking, well, surely they can't continue to grow at such a fast pace like that. But if I had said that for like the past 20 years, I'd be very, very wrong. Because I mean,
Right.
I don't know what they were worth in the 90s, but I mean, it's crazy that within, I don't know, 20 to 30 years is my estimate that they could get all the way to 3.1 trillion. I don't know what year Apple first started doing their thing, or when they started the company.
Apple in 1980.
1980. Okay. Yeah, if you look at the stock chart, as far back as I can go on Google anyway, is to 1985, where it was it says 10 cents. It's wild. Yeah, so right here it says Apple's $212 a share, and part of the reason why I keep talking about these splits so much is because I don't want people to think that they are somehow getting a better deal on a company because all of a sudden the price per share is lower than it used to be. Because like I said, that market cap number, and this is really important, is the true value of the company as of close of market. So even though it looks like, oh, that's not too bad, 212 a share, but you're buying something that is valued at 3.18 trillion with a PE ratio of 33. So, I'm not saying it can't continue to perform well, but just like I said with Tesla, a lot of those gains have already been gotten. So
I got a question for you. Concerning some news I saw the other day. I know that Google is publicly traded. It's part of a company called Alphabet Inc. And a judge ruled just the other day that that Google had a monopoly. If and traditionally that has meant that Google would either have to sell part of its company or they would have to give. I'm not really sure how that works, but anyway, it traditionally they've had to break up somehow if you were ruled a monopoly. How does that affect your stock? Like if you're invested in this company here, and all of a sudden the judge rules that you have a monopoly, what happens?
Probably what you would think. It's gonna hurt you for sure.
Yeah,
And
yeah,
that's why so many people hate the idea of, and don't get me wrong, I don't like the idea of government interference in things either, but it's one of those things where the thing that makes it so complicated is governments do have a responsibility to try to make sure that companies don't get too powerful and out of control for competition reasons. And like I said, once they get so large, I mean, theoretically they can just merge and acquire whatever they want to in a lot of cases. And so the government does have some responsibility to try to keep.
and I get that they don't. It's not like they're just losing their money. I mean, you do have to sell off. You still get your value. You just don't get to keep increasing like you were increasing.
Yeah.
But it does break up in at least the people who are invested in it. It breaks up a good thing.
Yeah. I'll have to look into that more because I want to say they just have to take the hit. I feel like there's
Interesting.
Yeah, but I could be wrong. I'll have to do more research on that. But I want to say one of the companies that this has actually happened to, didn't it happen to AT&T?
Well,
Or Bell South?
that's right. AT&T is one of the companies that was started because of the Bell breakup.
Yeah. So, and it may have also happened to Microsoft at one point, and Microsoft came through it anyway and became powerful again. But yeah, again, I'll have to do more research to confirm, but I want to say it will hurt you because once one entity becomes two or three or more different entities, that's, I guess that's what you would as an investor call monopoly risk. Some of the wealthiest investors will tell you that basically what you're trying to do as an investor is play a big game of Monopoly and get as big as you can. And I guess sort of the government's responsibility is to be a checks and balance. And that's just part of the risk that you take. They could decide that you've become too large and powerful and they can break up the company. Nobody likes for that to happen, especially if it's something that you invested in, but it's just a risk that everybody faces, I guess. But in this modern world where some of the big economies bring in trillions and trillions of dollars, it's also important as a government to examine and say, well, can we afford to split some of these companies up? Because like I said, you do want to make sure that the market can continue to have new and upcoming new businesses, but you also don't want to squash, the revenue that's coming into the treasury at the same time, because we're always taking on more debt. So, I mean, if we destroy the companies that are bringing in more revenue to help the treasury and help us defend ourselves with the military and that sort of thing, then.
Well, I can tell you this. I don't know if it's just a development of technology or if it really was the breakup of that company. Overall, prices are, comparatively they're lower today than they were back when we were paying long distance bills back then. And this has been years and years ago. And I say comparatively, I know that we're still paying, everybody's paying a good bit a month for their cell bill, but back when you were paying by the minute for long distance, It was ridiculous.
Yeah. Yeah, I guess I'm fortunate that I never had to experience that. That does sound like that would have been pretty crazy.
That's right.
Um and it still doesn't feel cheap to me. Like in any unlimited wireless plan or whatever, it still feels like you're paying too much, but I guess it's better than what it was. Yeah.
Well, just imagine this. You've got comparative phone bills probably probably near where they were or where they are right now, but you have no internet. You have no internet. You have, basically all you're doing is making calls. There's no texting, there's no internet, and you're still paying the same price.
Yeah. Yep. Well, I don't know what time we're at right now, but
10 after.
10 after. Yeah. Yeah, but I mean, like, I don't know.
We started about 3 minutes after.
3 minutes after. Okay. All right, so I guess real quick before we wrap up the stock conversation, again, the tool that I was using today to screen through stocks is called Simply Wall Street. They're not a sponsor. I don't receive any money from them. I just think that it's a nice tool to be able to use. That being said, there are, I'm sure, plenty of other options out there that are free that you don't have to pay for. But the reason why I like Simply Wall Street is it sort of dumbs things down a little bit and breaks them up into sections. And I don't know, to me, they sort of do what Apple did with phones, which is they just make everything easier to navigate. So,
is it a purchase or a subscription fee?
I feel like, at least in the times that I've gotten it, it's a one-time fee. But I mean, one time yearly. So
Gotcha.
Yeah.
Or you can pay for it quarterly or something like that.
maybe you can do it monthly or quarterly. I'm not entirely sure, because both times that I've gotten it now, I've had to do the full annual fee, which I don't really.
Yeah, but even though you're paying yearly, it's still a subscription fee,
Yeah. I mean, it's not a.
not a one-time purchase.
Yeah. So that's yeah. Subscriptions can definitely get annoying and pile up, but
Well, depending on what you need. If this is a good tool, it may be worth it.
yeah, I mean, my mentality is it's better to have a subscription to something that makes you money as opposed to,
Oh,
you know,
amen.
we have a lot of subscriptions where,
Yeah, if you're going to get this subscription or Netflix, get this one.
yeah, I think it comes out to roughly $20 a month or something like that, which again isn't cheap, but I mean, I'm sure Netflix is somewhere around there, 20 something a month, but not as low as you'd like it to be, but I mean, it's a good tool. So it's something to consider. But you also have things like Google and Yahoo Finance and you can go to companies' websites and just go to their investor sections and look up the financials yourself. But it's nice having it all in one spot. And there's something that maybe I'll talk about this on another episode, but there's an actual tab that says Screener itself. And maybe after we start videoing or doing video recordings, we'll take a closer look at that, where you can actually use this tool to filter down to deeper levels and look at smaller companies that, what part of what Warren Buffett did was he found companies that he felt like were undervalued, small companies. And so we'll get into that another time, or on another episode, like I said, and explain that a little bit more. But I guess before we wrap up here, Chris, did you look at Deuteronomy 20 at all, or do you
I'll be honest with you, I have not had a chance to look at it.
okay. Maybe trying to. I guess we can. Maybe we'll put that off for another. Put that off for another episode, but or I don't know. Do you want to talk about it or save that?
Tell you
for
what, why don't
another-
we hold off?
hold off? Okay. So yeah, we'll put that off for another one. I guess before we wrap up, then is there anything else that you'd like to take a look at, or
Let's see here.
these are just what is this right here? This is let me get a dashboard. I'm trying to think of something. Well, Uber. I guess Uber is another one. It's not none of these are dividend payers, but I mean, obviously Uber has grown a lot over the years. Looks like as of close of business today, Uber is now worth $184 billion, which is also pretty high in a short time span. Let's see. Trying to see when Uber was founded. Yeah, Uber was only founded just back in 2009. So
16 years.
yeah. Are we in 2025?
Mm-hmm.
Took me a minute to even. I was for some reason I was starting to think we might be in 2026. But yeah, so from 2009 to 2025, Uber is now worth 184 billion, which is a lot of growth in a relatively short time frame.
And that's one of those companies. I know we've talked about these things before, but that's one of those companies that, you know, their initial risk was huge because of the amount of money that they had to put into this technology, and they could have gone down really quick had it crashed and burned. But they saw a need again, like you were talking about, capitalized on it. People bought into it, especially the drivers, because they needed the drivers. And not only that, they deliver food now too. They expanded their business as well. So, you know, another one of those situations where they had good leadership and they knew what was coming.
Yeah. Uber definitely surprised me. I had a feeling that they were going to do well, but they definitely keep exceeding expectations. And another reason why I find Uber interesting is I know that part of what investors in society want to eventually, or the point that we eventually want to try to get to, is where people being able to fly from location to location is a lot more successful. And I want to say Uber is working on their own passenger drones, is what I call them. They're basically like,
Interesting.
yeah, they're sort of like what flying cars have sort of turned into,
Right.
basically. So I think a lot of them are taking on the form of quadcopters and so on, but I don't know when all that stuff will finally pan out. I think the biggest struggle is the FAA, the Federal Aviation Administration. That's
Absolutely
got to be a nightmare to try to manage.
Fully autonomous cars still are not here yet.
Yeah,
and they've been in, and you would think that flying would be a little bit more stringent.
Yeah, I would think we certainly will see automated on the ground vehicles before we see them in the air, but
that's right.
Could be wrong, but it'll be interesting to see over the next few decades how long it, or if we ever get there. I mean, it's
right.
I know they've been having problems getting to, I think level 5 is supposedly when they, you know, get pretty much as good as they can get, and it sounds like we're having a lot of trouble reaching that point. And I think part of the problem is because humans have a tendency to break the law or not, especially traffic laws. And
that's right.
So I think these automated vehicles have trouble dealing with people that, you know, are swerving into other lanes and all kinds of stuff. But
well, look, you even have people trying to treat Teslas as fully automated, and they're not yet.
Yeah. Yeah, I've heard stories of people sleeping behind the wheel, so don't do that.
That's right.
Do not do that. They are not that reliable yet. But anyway, guys, I think that's pretty much gonna wrap us up for today. So thanks for joining us. And I think Ryan had to run, so I'm gonna go ahead and go close this out. But oh, real quick before we go to, I know we have some listeners in India right now, and so I'm continuing to pray for you guys. I hope that you and Pakistan come to a peaceful resolution on that. So
Amen.
I'm trying to learn more about that conflict. Maybe we can talk a little bit about that another day, but I'm praying for you guys. I hope something good works out.
Amen.
All right.